Crypto long and short. The striking dichotomy in DeFi tokens post-October 10th. In this week's Crypto Long and Short newsletter, Martin Gaspar shares a snapshot of where we are post-October 10th, and where potential opportunities from dislocations may lie. Then, we take a look at investor sentiment in the wake of the relentless market sell-off, confusion, resolve and humility, with Andy Baehr's vibe check. Welcome to the institutional newsletter, Crypto Long and Short. This week, Alexandra Levis, Expert Insights, by Martin Gaspar, Senior Crypto Research Associate, FalconX. The October 10th crash continues to reverberate in the crypto market with broader softness across sectors. It's especially notable in DeFi, the lifeblood of on-chain activity today, and the one sector that generates the majority of crypto token revenue. Let's take a quick glimpse of where we are. Of a subsect of 23 leading DeFi names across the decentralized exchange, DEX, lending and yield verticals, only 2 are positive YTD as of November 20th, 2025. QTD, the group is minus 37% on average, highlighting the damage this extended sell-off has done. But the mixed price action reveals some nuances. 1. Investors seem to be opting for safer, buyback, names or allocating to names with fundamental catalysts. On the buyback side, names like Hype, minus 16% QTD, and Cake, minus 12%, posted some of the best returns for larger market cap names in the cohort, indicating investors may be allocating to them or that their price has been supported by their substantial buybacks. Meanwhile, Morpho, minus 1%, and Syrup, minus 13%, both outperformed their lending peers on idiosyncratic catalysts, such as minimal impact from the stream finance collapse or seeing growth elsewhere. 2. Certain DeFi subsectors have become more expensive, while some have cheapened relative to September 30th, underscoring the changing landscape post the October 10th crash. Spot and Perp DXs have seen declining PS multiples as their price has declined faster than protocol activity. In fact, some DXs such as CRV, Rune and Cake have posted greater 30D fees as of November 20th compared to September 30th. We're seeing similar trends across Perp DXs with Hype and DYDX multiples compressing faster than declines in their fee generation. 3. Lending and yield names have broadly steepened on a multiples basis, as price has declined considerably less than fees. For example, KMNO's market cap fell 13% over this period, while fees declined 34%. According to data from Artemis. Another factor may be that investors are crowding lending names in the sell-off, considering lending and yield-related activity is often seen as stickier than trading activity in a downturn. Lending activity may even pick up as investors exit to stablecoins and seek yield opportunities. This positioning may reflect where investors think the DeFi sector will see growth in 2026. On the DX front, QTD performance suggests investors expect perps to continue to lead, and Hype's relative outperformance may point to investor optimism around its perps on anything HIP3 markets, which are seeing their highest volumes as of November 20th. On the other hand, the only crypto trading categories seeing record volumes lately are prediction markets. Therefore, the cheapening in the DX sector may be warranted on lower growth expectations. On the lending side, investors may be looking to more fintech integrations to drive growth. AVE's upcoming high-yield savings account and Morpho's expansion of its Coinbase integration are recent examples of this trend. Overall, these trends reveal potential opportunities from dislocations in the wake of October 10th. It will be interesting to see if the changes mark the beginning of a broader shift in DeFi valuations or if these will revert over time. Francisco Rodriguez. This week's crypto market crash sent conflicting signals on the institutional side, as historic ETF outflows and declining stablecoin liquidity indicated short-term capital flight. Despite the risk-off sentiment, sovereign and corporate conviction hardened. Vibe check. By Andy Baehr, CFA, Head of Product and Research, CoinDesk Indices. Bitcoin has lost a third in 7 weeks and folks want answers. The prevailing sentiments among the podcasts, Substack articles, newsletters and socials are: 1. The most recent leg down caught many folks off guard. 2. There are plenty of technical explanations, ETF outflows, DAT's MNAV, 10/10 damage, retail focused elsewhere and end of the cycle. 3. There are plenty of macro explanations, Fed rate cut probability decreasing, lingering damage from the government shutdown and the Clarity Act delay. 4. Hey, this is crypto, it draws down by 1/3 sometimes. 5. Sentiment is max negative. 6. Possibly setting up for a rally, but maybe not in time to save 2025. The crowd seems to have navigated the 5 stages of grief and emerged humble and sanguine. A nagging question. Was there enough grief? Or is this another false bottom? Did capitulation occur? The humility, in particular, was most welcome, and best captured in Eric Peters's superb WKND notes. With a wink, he alludes to the most vacuous form of market commentary. There are more sellers than buyers. What we mean when we say that markets move because there are more buyers than sellers is that when prices start to really move, it's okay to not understand why. We say this to remind ourselves that anything can happen. It's a protective mechanism. He reminds us that humility is not only a virtue, but necessary for survival. Investors who blow up and lose everything tend to believe that they know exactly why a market should be moving. They may believe it should move higher and get stubbornly longer, leveraging up even as it moves lower and lower and lower, or vice versa. The survivors in this game have watched enough people destroy themselves in such a way that we prefer to accept the wisdom of markets. We learn that when prices fall even as most traders/investors think they should rise, there must be a reason. We just don't know it yet. Sooner or later we will. One manager's view. It's all well and good to be humble and sanguine, but when you are running 2 hedge funds, you also have to make decisions. On Friday, I brought Chris Sullivan from Hyperion Decimus on for a CoinDesk Markets Outlook spot. Disclosure. Hyperion Decimus is a client of CoinDesk Indices. We agreed, both being derivatives people, that market volatility, while anxiogenic, can also be exhilarating. A roller coaster. Chris sees a V-shaped event ahead, declaring that it is, or will soon be, time to feast on fear. We also agreed that seeing more developed put skew in Bitcoin in the last few weeks was a healthy sign that the market is maturing, i.e., that recent downside hedging resembles more mature asset classes. 2 more observations. 1. Big wallets which may have sold above 100K appear to be buying back 20% lower, and 2. Trend signals have allowed his funds to step out of the way weeks ago and have plenty of dry powder. Trend has been a good friend in 2025. Speaking of trend, it is turning out to be a savior of 2025 performance. Our Bitcoin Trend Indicator, BTI, launched in March 2023, uses a quartet of moving average crossover signals to indicate the presence and strength of trend in the price of Bitcoin. It has indicated significant downtrend for 24 days. Our clients have implemented several strategies based on BTI to allocate to and away from Bitcoin. The YTD performance of one of those appears below. As more and more investors and advisors adopt Bitcoin and crypto into long-term portfolios, a trend overlay can help smooth the ride and keep folks in the game. It's especially pertinent now, as concerns that self-fulfilling, end-of-cycle behavior weigh on Bitcoin's price. Chart of the week. Despite the overall downtrend post the major October 10th drop, altcoins proxied by the CoinDesk 80 Index, CD80, have mostly performed in line with, or even better than, BTC, with market benchmarks CoinDesk 5 Index, CD5, and CoinDesk 20 Index, CD20, showing relative outperformance. This is surprising because altcoins usually exhibit higher beta during a market drop, suggesting that the recent selling pressure may be more BTC-centric, or that altcoin selling has already been significantly exhausted. Looking for more? Receive the latest crypto news from CoinDesk.com and market updates from CoinDesk.com/indices. Note: the views expressed in this column are those of the author and do not necessarily reflect those of CoinDesk Incorporated, CoinDesk Indices, or its owners and affiliates. Insights on DeFi Sector Growth in 2026 by Martin Gaspar of FalconX. Top headlines. Institutions should read by Francisco Memoria. Analysis on investor sentiment from the relentless sell-off by Andy Baehr. Altcoins versus BTC performance. In Chart of the Week. BlackRock takes first step toward a staked Ether ETF. BlackRock registered the iShares staked Ethereum trust in Delaware this week, signaling plans for a yield-generating Ether ETF that would stake the underlying asset to help secure the networked ETF outflows, stablecoin flows and DAT reversals signal crypto capital flight. Spot Bitcoin ETFs recorded $3.79 billion in net outflows in November through November 21st, the highest since February's $3.56 billion, driven by $900 million plus single-day exits on November 20. El Salvador buys 1,090 BTC as prices drop and IMF pressure mounts. El Salvador took advantage of the crypto market drawdown and bought 1,090 BTC at $90,000 each, boosting its holdings to nearly 7,500 BTC despite a $1.4 billion IMF deal discouraging public sector crypto buys. MasterCard picks Polygon to bring verified usernames to self-custody wallets. MasterCard expanded its crypto credential system to self-custody wallets, using Polygon's blockchain for human-readable aliases tied to KYC verified identities. Metaplanet unveils new Bitcoin-backed capital structure with $150 million perpetual preferred offering. Japanese firm Metaplanet unveiled this week a two-tier preferred share structure. Listen, does the future of crypto ETPs belong to altcoins? Canary Capital CEO Stephen McClurg joins CoinDesk Data and Indices President David Laval to discuss. Read, digital asset adoption in APAC is exponentially outpacing global rates. Watch, the current crypto market drawdown with Chris Sullivan of Hyperion Decimus. Engage, don't miss the institutional summit of the year. Consensus and SALT are teaming up to bring together Asia's top allocators and asset managers.